right? So right now, I'm just waiting for market to push a bit lower. We might see some rejection here, just depends what happens. But the ideal scenario I want to see market go to is to this accumulation price candle. Why? Because this is where all the buyers are going to be starting accumulating once again to keep on pushing higher and clear out the relevant equal highs that we just formed right here in the daily time frame. So those relevant equal highs, in a retail perspective, retail traders are going to start seeing double tops, double bottoms, and so on, right? So what does that mean for them? That means that they can get in for buys or sells depending on those different confirmations that they see with the patterns. Right? Me personally, I don't like getting in patterns since I'm not an institutional trader. I just take that as an initial confirmation for my institutional trades. Why? Because retail traders are going to get in for sales here and get in for sales right in this area as well to start being bearish. But the market's going to move very slowly. It's not going to really move with a big rapid momentum push like we had over here. Why? Because it's just retail traders trading. So they're just getting for sales, like slow sales, getting out, getting in, getting out, getting in from those sales. And they're starting to move their stop losses to break even, which their entry points were right here. So that's where they're starting to move stop losses. Why? Because now they are in profits and they don't want to be risking their profits, right? So that's why they're going to be moving that to stop losses and to break even. So me as an institutional trader, what I'm waiting for is to market to push a bit lower into this accumulation of price candle to then get in for a buy position and blow out this equal highs. Why? Because this is right where we have all the stop losses of retail traders right on the equal highs. So once market is going to reach that area to get in for a buy, the push to the upside is going to be very, very great. It's going to be just a spike up because that's where the banks are going to start getting for those buying positions. So right now what I want to do is just go to a lower time frame, run to my forward time frame. And I had mentioned before, watch. Actually, that's a perfect scenario I'm going to tell you guys. I don't know if you guys listen right now, but the reason why I mark 50% of the imbalance is because we're always going to tend to have an accumulation of price candle, right? So just like I mentioned, on a daily time frame, you might not be able to see that accumulation of price candle, but we came to the 4-hour time frame. What happened here? Market got rejected in this area. Why did it get rejected? Because we tapped and tested inside this 4-hour accumulation of price candle, which is my 50% imbalance of my daily time frame. Came into it, didn't break below, respected it well, and this is what we could have got in for that buy position. We could have got in for a buy position right in this area, and market spiked up. There would have been no drawdown. Like my entry would have been literally right there, right in that 50%. So let's say I got in for a buy right here, right? Let's say I get in for a buy right there. Because that was my 50% of my imbalance, which also aligns with my with my 4-hour accumulation of price candle. Now my stop losses, how do I do my stop losses? I just measure 10 to 20 pips max below accumulation. So 10 to 20, I'm like right here would be my stop loss at 20 right there. So 10 to 20 pips. So right there would have been my stop loss. So I would have had a 19 pip stop. And my take profit, I'm always going to have it on what is equal highs or old highs, right? So right here, I have equal highs, which is would have been my first take profit, which would have been 164 pips. Obviously, if I go to a lower time frame, you guys are going to be able to see those equal highs much better since it's a big time frame. You can't really see them as well as the lower time frame. So but what we have right here, equal highs. Market went and spiked right into those equal highs. We had no drawdown, well, maybe like 4 to 5 pips drawdown. After that, what happened? Market just spiked to the upside and would have hit our take profit of 164 pips. But going back into current price market, let's go back to the 4-hour. That was just an example that I was talking about. So we go to the 4-hour time frame. What's the 4-hour? No, we were on a daily, I believe. So yeah, we were on a daily. Let's see. Actually, yeah, we were on the 4-hour time frame. So yeah, right here on the 4-hour time frame, I'm currently waiting for it. It's just market to come down lower. And currently right now, I believe it's going to come and swoop through those equal lows right here. Because right here we took equal lows, which is in reality where we left a lot of liquidity. So you guys see all those wicks? All those wicks is where market was volatile. So what is market doing? Why did it come back to the downside? To come and clear out that liquidity. So when we clear out that liquidity, I'm expecting market to come lower into my accumulation price candle that I had on my daily, which is also my 4-hour accumulation price candle right here. Right there. So that's the accumulation price candle that I'm waiting for to get in for buying positions. As of right now, yes, you can actually take advantage of the sales. But me personally, I don't really like counter trading, which I do not recommend at all. I'd rather just be patient and wait for that good move than just getting in right now for the sale and taking advantage of that counter trade, which I mean, most definitely you can. but I don't really suggest it because right now you could catch 165 pips. But like I said, I really don't like counter trading, so I'm not even gonna even attempt getting in for a sale. Even if it looks good for a sale, I'm not gonna get in. Why? Because that goes against my rules. It's very, very important that you guys have a rule book to be annotating and writing down your notes on what's going on in your trades, what's happening when you lose the trade. Also write down why you lost that trade, and don't just close it sharp when you lose the trade. You always want to make sure and see the mistakes that you had. Like, see, okay, I lost this trade because of this. It didn't respect that. Okay, so I'm not going to do that next time, right? When I see that again, I won't do it. Why? Because most likely you're going to lose that trade once again, right? So it's very important for you to take notes on every single trade that you're going to be taking or every single trade that you took on why you won or why you lost, right? So right here, me personally, I'm going to be placing what is a buy limit and just be patient for that buy limit to be activated. So my entry price is going to be right on this commission price candle. It is a Euro AUD pair. So Euro AUD is a more volatile pair. So where I'm more likely to be risking a bit more pips than usual pairs. But my take profit raw is most definitely going to be right on this equal highs here, because this is where we start forming liquidity and stop losses from retail traders that mark the trends or they see the double top, right? So this is where I want to take my take profit, which will be a total amount of 400 pips. And then my stop loss, like mentioned, it's going to be from, since we're on the forward time frame, could be average from 15 to 20 pips. So my stop loss would be like right here, around 30 pips, around that blue line. So 35 pips that we will be risking to gain a total amount of 401 pips. So this is for Euro AUD. If you guys want to play that buy limit, you guys can, which we have the buy limit right there. That would be the entry price. This would be what was it? Profit area. And that will be the stop loss area. Let me know once you guys have that, and I'll continue with the next pairs. You use fair value gaps too, or just I really don't use fair value gaps. I use them here and there, but not really. I mainly base myself out of imbalance. Okay, let me know once you guys have that on the chat. Put a thumbs up when you're done. You guys got it?
Hold up, bro. Almost done. All right, I'm done.
All right, awesome. Does anybody have any questions on Euro AUD or any questions of what I was talking about?
No.
Clear? Okay, awesome. So the next pair is going to be Euro JPY. Actually, Euro JPY, we're going to be getting in the day of today for buying positions. Actually, I've been on this trade with the team of PPC. We've been holding this trade since last week, right? Yeah, last week on Sunday. I actually posted this on my YouTube video. So if you guys don't follow me on YouTube, same name as my IG handle, AndreFX Official. I put in content there, free course in there as well. If you guys want to go ahead and look at that YouTube channel, you guys can. And so right here, as mentioned, we got in on the buy on Sunday. Our first buy position was down here, second buy right here, third buy right here. And all these three trades, literally no drawdown, zero drawdown at all with all those three trades. And we currently secure around 150 pips with those trades combined as in right now. And right now we are going to be most likely getting for another buy position. So I'm going to just go ahead and explain on why we got in for buys down there, right? So the reason why we got in for buys down here, because this was actually the first buy position was down here. I actually erased it, my bad. So the reason I got in for a buy there, so we have four trades going on this one, not three. That was my mistake. We actually have 4 trades going on, and now 4 was no drawdown. So the reason I got in for a buy right here, just so you guys know. So once again, I have a false formation on my daily time frame. So what do I mean by false formation? False formations are patterns that retail traders are looking for, which is double tops, double bottoms, head and shoulders, reverse head and shoulders, flag formations, and so on. All that is false information that they give you in a trading market, right? Because they want to be faking you out as a retail trader when institutional banks come in for their buys or their sells. So we have the false formation here. We have the left shoulder, the head, the right shoulder, right? So do I get in on this formations? No, I don't get in. I know it's going to go for a sell, But me personally, I don't get in because I'm not a retail trader. I don't like trading retail. I just trade institutional, right? So when I wait here, I wait for retailers to get in. They get in for their sales. They break this neckline here. They start pushing in lower. And when they push in lower, what I wait for, I wait for market to come and tap into an institutional candle, which is either my commission price candle, you can call it institutional candle, whatever you want, but which is this last bearish candle that we see right here. This last bearish candle before the push up is my commission price candle. After that happened, do I get in right away once the test is there? No, I don't. I wait to see if there's some rejection going on, which I do see rejection here. A lot of rejections, actually 1, 2, 3, 4, 5, 6 days got rejected. After the 6th day, what happened? Market pushed higher. Now, did I get in down here? No, I didn't get in down here. I also didn't get in right here. Why? Because I want to wait for another confirmation for me to get in for that buy. I want to wait for that confirmation when market's going to push higher. And once market push higher, now I know the market's for sure going to start going to the upside. But I'm not going to get in for a buy up here. I'm going to wait for market to retrace and tap where? Tap into my Kimetra price candle that we left right here. Our most recent Kimetra price candle now. I'm going to wait for that candle to be tested for me to get in for a buy position. So right on this candle, I had placed a buy limit before market closed on Friday of the last week. So Friday before market closed last week, I placed buy position, buy limit. And on Sunday, market open, activated my buy limit right in this area. Why? Because market came down to that area, we traced there, and got activated. Right? Also, we mark our fib. That's also going to be my 7.9 or 7.5 fib level, which I consider my discounted prices, right? Which are deep discounted prices. So what did market do? We have market coming down here. Boom, came into my 705, got tested, and spiked to the upside. So this right here is why I got in for a buy position. After that spike happened, boom, I have another confirmation on my daily candle. I have a daily imbalance, which is this big old blue candle is my daily imbalance. Plus, I now have a new accumulation price candle right here, my new bearish accumulation price candle. So what I do, I mark 50% of my imbalance, which I marked it with this blue line, which also is coming the confirmation that aligns with the opening of my accumulation price candle right there. Plus that, what I also did, once again, mark my fib, start to end. Where our market come to? It came to our 0.5. Our 0.5 is called a equilibrium level. So now equilibrium level is a so-so entry that you could get in. It's like let's say you go to the store and you buy a pair of shoes for $100, right? That's the normal price. That's equilibrium level right there. Normal price, no discount, no nothing. So once you go into a discount, that's when the shoes are now $50. So that's why you consider the 705 or 79 discount levels, because they're on the discounted price. So people are most likely to be buying those areas, right? So right here I had a 2-star confirmation, the 0.05 equilibrium, but I already have my imbalance and my commission price candle, which that gives me a lot of intel and confirms me a lot to start getting for that buy position. So we got in there once again for a buy position, but we came down to the 4-hour time frame before that happened to try to see what happened. So right here we also had what we have what's it called? The morning star. We had that morning star, the bearish candle, middle doji, and then we have the bullish candle overcoming 20% or more from a bearish candle. And also that confirmation of the morning star. And after that, what happened? I got in for a buy position. Why? Because that morning star is confirming me that price is going to be pushing higher. So that right there is where I got in for that buy position, and boom, market spiked to the upside. And once again, right here, I got in here once again because right here I marked 50% now on my 4-hour imbalance. So this right here, this push up is my 4-hour imbalance. Why? Because that way I just pure pressure of buyers. So what I'm gonna go ahead and do is mark 50% of that imbalance and go to a lower time frame. Why? Because more like in that lower time frame, we're gonna be finding where it is our accumulation price candle, right? So coming back over here, let me just zoom out. Right here is where I got in. My 50% of my 4-hour imbalance is testing where? In my 4-hour and my 1-hour accumulation price candle, which is that last bearish candle that you see right there before the push up. So that's where I got in, and that's the confirmation that gave me to get in for that entry. So I have my daily imbalance, my daily accumulation price candle, then I have my 4-hour imbalance and my 1-hour accumulation price candle that got tested. So that right there are enough confirmations that are telling me to get in for that buy position. So that's why I got in for that buy position there. Plus, I also had my 50% of the fib, which is my equilibrium level. So that's where I got in for that buy position. Then my most recent buy, where I got in, which we could actually get in, as we're speaking right now. We might just wait a bit more for London to open, since London's, we still have like 1 more hour for London to open. Just kind of want to see what happens during that London session. But the reason I got in for a buy right here is because we created this 1 hour conventional price candle that you guys see right here. Conventional price candle 1 hour. Market pushed to the upside, clearing out high right here, clearing out this old high, push up. Once we clear out an old high, what's gonna happen? Market's gonna retrace down and test into this conventional price candle that we had right here. We tested into it, that's why I got in for a buy, and market pushed up once again. And we clear out what? We clear out relevant equal highs in the 1 hour time frame. So every time that we clear equal highs or old highs, market always, no matter what, it's gonna have a retracement. So what's gonna happen here? It's gonna retrace it back down. I'm gonna just go ahead and erase this so it don't look that messy. So let me see. Yeah, there we go. So yeah, we retrace back down. If I mark my fib, I'm marking from my start to my end of the impulse, right here. So I always mark it from wick to wick, start of the impulse, end of the impulse. Market retrace back down, tested where? My 7.9 fib level, which is a good discount area for me to get in. So that right there, I could have gone in again, but I didn't because I already have my buy position over here. I'll be waiting a bit more, see what happens around this area. Most likely, I'm going to be placing the buy limit. I do want to see it come back down. Maybe come down into this wicks right here. Test maybe 50% of this candle once again to keep them pushing higher. But let's just go ahead and check. Let's go to lower time frame.
15-minute and 5-minute accumulation candle.
Yeah, that's what I'm saying. Right now, I'm gonna go to lower time frame. See if we see some confirmations for us to like get in as soon as we speak. So let's see. So 15-minute time frame. Yeah, so 15-minute time frame. We already had that spike up. So I'm only gonna be placing now my new buy position on my 15-minute accumulation, which would be right here, the opening of my last bearish candle. Right, so that's where I want to base my new entry at, since we already had our spike. And me, like, also one of my rules that I have is not chasing trades. Like if trades already had this move and already moving to the upside or downside, I consider that as a not a valid trade. Why? Because I just don't like chasing trades. Because when you chase trades, you can say, oh, it's shooting up. I'm gonna go ahead and get in so I don't lose, like so I can make money, right? But then what happens? You get in too late. You're chasing it. Then you're gonna start seeing market making a retracement, and you're gonna start seeing some negative numbers on your phone, some red numbers on your phone, and you'll be like, oh man, I'm losing. I'm gonna get out now. I don't want to lose more. Then you're gonna get out, and then little do you know, it's gonna spike back up, right? And then you'll be like, oh shit, I should have stayed. Why did I get out? So that right there alone is gonna affect you a lot when it comes to your emotions that you're trading. When you're trading live money, you really don't want to be chasing trades because that could really affect your emotions. That's one of the mistakes I had when I first started trading. I blew a lot of accounts just by doing that, by trying to chase trades. I learned that you gotta be patient and you gotta wait for the right moves to happen. So like me, for right now, I'm gonna wait for this pair to come back down to this area into its 15-minute accumulation price candle for me to then get in for a new buy position. So you guys could definitely place a buy limit on your JPY. So I'm gonna be placing the buy limit. And my stop loss, let me check. My 1 hour time frame. Yeah, so it's gonna be just below those wicks right here. Around a 14 pip stop. To my overall TP is still gonna be the same on my daily to clear out the relevant highs of that false formation. So we have all the way up there, which would be a total amount of 150 pips. So here's the entry price. This will be the profit area at 150. And this right here is the stop loss area at 15 pips, I believe. Yeah, 15 or 14. Yeah, 14 pip stop to gain 157 pips. Let me know once you guys have that.
Yep.
Awesome. All right. Does anybody have any questions on your JPY?
No.
Nope.
What was the entry price on that?
This right here.
Thanks, Andre.
Yeah.
Te extraña.
This guy. All right. So any questions? Anyone? No one? All good?
All good.
All right. And then, so the Zoom call is about to end. 6 more minutes. So GCAD was another one I want to go over with. So let's see. Okay. So GCAD, we're also going to be looking for buying positions, right? So the reason why we'll be looking for buying positions is right here. We look at the daily time frame, but we created relevant equal highs up here. We create relevant equal highs. Market's going to, at some point, want to clear out those relevant equal highs. Plus, we have a lot of liquidity going on over here as well on current market. The market is going to chase liquidity to clear out that liquidity and stop loss that we have right there, right? So on the daily time, we have relevant equal highs. Market came back over here down to the commission price candle. Like I mentioned, it always does. Boom, got rejected. So we have commission price candle right there. Market came into it, tested it, got rejected to the upside. Now, as mentioned before, I don't always end up getting right away once we do that test. I usually wait for another confirmation for me to then get in for a buy. So we had to push up. After we had to push up after that first reaction, what's going to happen? Market's going to retrace back down into its most recent accumulated price candle that we had right here. What market do? They came into it, tested it, and it got in, and we would have got in for a buy position right there. But then we also added our fib start to end. That would have been a discounted price, which came what to my 7.9 fib level discounted price. There's another confirmation for me to get in for a buy. So that right there, I would have got in for a buy on GCAD if I would have seen that happen during that time. If I didn't, so I didn't get in for a buy. So too bad. But I'm going to be looking for more opportunities to get in for new buying positions. But that right there would have been a great buy to get in. We would have this whole push to the upside. What market do? Market goes to the upside. Does what? Clears out this old high here. After we clear out the old high, what's going to happen? Market's going to retrace back down to what? Our accumulation price candle that we left right here. Our new accumulation of price candle. Our last bearish candle before the push up. Market comes down, tested it, and what happened? Got instantly rejected, and it is now starting to move to the upside once again. Why? To clear out liquidity that we have right here. So we have buy-side liquidity that still needs to be cleared out before we get in for a sell. So we're going to be looking for buys. Right now, it might be a bit too late to get in since we're on a daily time frame. It's already been going up. So what I want to go ahead and do is go to lower time frames and try to find a good entry. Try to find that good entry for me to still be valid and get in for that buy. So currently right now, I am market still moving to the upside. I want to see market come into the breaker, which is this. So the breaker is an area where we technically break structure to the upside, and market just comes and tests back into that candle, which is this last bearish candle that we see right here. It's the breaker. So I want to see market come into that breaker, test it, and then start pushing to the upside. If we come into the 1 hour time frame, that should definitely be our 0.50 fib level. Oof. Actually, yes, it won't be valid no more. I really don't see it coming down here no more. Why? Because we already did. We actually already did, came into that area and got rejected. So we can't get an entry there no more. So more likely going to happen, market's going to just keep on spiking to the upside. So I want to be going to a lower time frame. Maybe find a retracement now into this candle right here, into this 1 hour accumulated price candle. Since we already got rejected down here, market's no longer going to want to go down there. Why? Because the price was already fulfilled, right? So market's going to just want to come and test into the accumulation, this new accumulation that we left right here, depending how lower time frames are looking. Let's go to the 15-minute time frame. If it looks too messy, jeez. This amount of time frame we actually already came into it. Too late. Yeah,
About the one right there.
we're not gonna be able to. It's already moved. How many pips did I have to move? I removed like 13 pips. So we'll be chasing it if we get in right now. We'll have to have a wider stop, which I really don't like doing. So if anything, I'll just put a buy limit right in that same area. If it comes back down here, I mean we'll get in. It'll activate our buy limit, but it's most likely not to. Why? Because the spike's already happening, right? But if anything, if it does coming back down and mitigate there, we'll just activate our buy and then we'll just go from there. Right, so I'm gonna just go ahead and place a buy limit there. My stop loss, as mentioned, 10 to 15 pips below accumulation. So right there, 3-way stop. At a 12 pip stop, just gonna make it 15. Actually, you know what? Never mind. I'm actually seeing something that I didn't see right now. So we still actually need to come back down here.
Yeah, that's the one I was gonna ask you about.
Because market never came down and tested into the commensurate price candle. We still have price action that has not been fulfilled. So we still need to come back down and test into the commensurate price candle before we see a push to the upside. So I'm gonna be putting a buy limit down there. Get in for long. And this might be the last part I go over with because there's only like 1 minute left of the Zoom. Let's see. Then my stop loss. Right there. 4 hour.